Hi folks, Duncan here from CapitalQ. Okay, so you have gotten yourself into a bit of a situation and you have one or more outstanding and now overdue income tax returns. So what does it really mean? In this video, I will start with some of the more tangible ATO and tax law short to medium term consequences. Firstly, as discussed in some of our other videos, your next tax return becomes due much earlier than it otherwise would, and payment of an associated tax also generally becomes due much earlier. So now not only do you have the overdue return to get in order and potentially some associated tax to pay, you are on the verge of a double whammy because the next one will also be due very soon, if not already, and its tax will also be due soon. Next, of course, is the very real chance of late lodgement penalties. Now, you may have heard from other people that they have lodged late and not been penalised, or if they were able to ask the ATO to write off the penalty for which they obliged. And yes, admittedly it does happen probably more than you might think, but be very careful if you are putting off lodgement with the expectation there won't be penalties applied. I think it is a very dangerous game to play. Next is interest on overdue tax. So if part of your reasoning for not lodging on time is because you are worried about paying the tax, well, I can tell you it is a false economy. Again, sometimes you might be able to get the ATO to waive the interest, though in my experience that is harder today than it may have been in the past. And again, I wouldn't recommend relying on that strategy. Assuming you can't get them to write it off, the interest rate is definitely more than you will be paying on a home mortgage, though I will admit it is less than what you'll be paying on a credit card. Next, the ATO may require you to lodge other and future tax returns early, so the problem may extend beyond just the current periods. Maybe that is a good thing, it forces you to get your life in order and stay compliant in future, but ultimately you will want to access the lodgement and payment concessions all other businesses and taxpayers enjoy, so don't put that at risk. Then we start getting into some of the more painful potential consequences. The ATO could just assess your tax for you without you lodging. And if they do, I can pretty well guarantee you will pay more tax than you would have if you had prepared your own return. At best, this results in a major fight with the ATO and a lot of headaches and even more sleepless nights. At worst, it costs you much more than it should have. If the ATO know you owe them, including from an automatic assessment, as discussed, they can do a number of things. This includes reporting you to credit agencies, which now mean news of your problems are spreading and there could be an impact on your credit rating and financial standing in the future. This also includes being able to garnish your bank accounts. What this means is they write to your bank, actually I believe they write to all of them, and let them know that for any bank accounts you hold with them, the bank is compelled by law with no discretion to deny the request to pay at least 30% of the balance to the ATO. In this case, you have no say in the matter whatsoever. So this not only sees a bunch of money walk out of your accounts when you didn't expect it, it also now means the banks know you are having financial difficulties, and it could very well affect your ability to borrow and otherwise negotiate with them in the future. We actually had a client recently have their bank account garnished by the ATO, and as a result, the bank put a complete stop on all their accounts, so nothing could be withdrawn. It meant wages didn't get paid for nearly a week, which of course meant some very disgruntled employees, and ultimately this was the beginning of the end for that business. From there, things get even more serious, though to clarify, there is no set order to the potential consequences, so depending on your circumstances and the ATO policies and appetite at the time, some of the harsher stuff could come much earlier than I am describing. But as I think everyone knows, not lodging your tax obligations is an offence. It is against the law, and so this means real legal action can be taken against you, which could result in any of a range of consequences, the worst being substantial fines and even jail time. Now you may be thinking that won't happen, and for most people, even with pretty poor lodgement histories, they are probably right and it probably won't, but it does happen. It happens surprisingly regularly, so if it is happening to someone, it could happen to you. In part 2 of this video series on the real consequences of having overdue tax returns, I will discuss some of the more intangible consequences, so make sure you check it out. We've just released 2 groundbreaking new resources for smart, ambitious business owners and serious private investors. The first is our free downloadable report entitled The Business Owners and Investors Due Diligence Checklist. It provides you the 7 critical questions you must ask your accountant and advisor to ensure you have the right one to help you pay less tax, build genuine lasting wealth, and to stay out of trouble with the ATO. It also includes 9 wealth building strategies we believe most accountants never reveal to their clients because they don't know them themselves. The second is our complete guide entitled The Savvy Business Owners and Investors Guide to Choosing the Right Accountant and Advisor for Today's Economic Climate. It includes the due diligence checklist and the 9 wealth building strategies, plus a whole lot more educational information to help you make the right decision. We can send you the complete guide, including audio CD, for free via express post so you can have it tomorrow. Just follow the links at the end of this video or below if watching on YouTube to access the free report or the free guide or both.